Hi, this is Anthony and welcome back to my show. In 2021, stocks were on fire. Money-bleeding high-tech stocks were hot, meme stocks were going to the moon, and EV stocks were skyrocketing. But now most indices are down and have from time to time dipped into bear territory. The edge of Europe is engaged in a war with nuclear saber rattling. Most people agree that the United States is headed into a recession and inflation remains at historic highs. Not a lot to get excited about on the near-term horizon, but as I always point out in my videos about investing, most investment portfolios should be made up of well-diversified long-term holdings such as broad-based mutual funds. Although for some people a small percentage of their portfolio might be invested in more speculative stocks if the investor is prudent and cautious in the allocation of those funds. And again, this is not investment advice. I'm not an investment advisor, just an entertainer on YouTube. That being said, I've argued for a long time that one needs to be very cautious about small cap companies that are manufacturing or propose to manufacture electric vehicles. Companies such as those which go under stock symbols FUV, SOLO, and ELIO in particular. All of those companies have done horribly, and their investors in the long term have generally lost 96 to 99% of their investments in them. And if you're interested in investing in EV stocks, then perhaps you should just consider a small investment in Tesla. And for full disclosure, I have some shares of Tesla. I'm not promoting it here, and even if I did, my little channel is not going to move the price of Tesla on the stock market. Also, for full disclosure, I don't hold any of the other stocks that I'm mentioning in this video, and I'm not selling any securities short. But if you've made it this far, you probably are interested in penny stocks. I'm not advocating for them, and in most cases I argue against investing in them. But I think from time to time there are potentially a few hidden gems within the low cap, low price securities markets. One company that I came across is SENS. And I want to remind you, I'm not recommending that you buy this. I'm suggesting that for some people you might be interested in doing your own research, looking at the pros and cons of it, and then making your own determination if it might be appropriate for a very small part of your highly speculative allocation in your portfolio. Here's a thumbnail view of what they do from Barron's. SENS Holdings Incorporated engages in the design, development, and commercialization of an implantable continuous glucose monitoring system for people with diabetes. Its primary product is the brand EverSense, a glucose monitoring device which includes sensors, smart transmitters, and mobile applications. The company was founded on June 26, 2014 and is headquartered in Germantown, Maryland. Let's look at their financials because that is important when considering whether to invest or not. I will have a link to their financials in the show notes. Be sure to do your own research on them, not just listen to what I summarize them as. In general, they're losing money when you look at their financials. From time to time, there are some quarters where they are positive as far as diluted earnings per share. This is a better sign than them losing money every quarter, although it appears that on a year-to-year basis, they've been losing money. Let's take a look at some historic charts. For the past year, they are down 56%. That's not nearly as bad as some of the shares that I hold. And the stock chart goes back to March of 2016 when it presumably IPO'd, where you would have lost 60% of your money since then. But as you can see, the stock can move quite dramatically from 37 cents up to over $4 a share. I would imagine that news from the company or news about mutual funds or hedge funds buying or selling the stock can cause dramatic swings. Is this a slam dunk? No, not at all. Is this right for everyone? No, not at all. But I think that since they make a product that is used by many people, that they might eventually be able to turn to sustained profitability, or else they could be purchased by a larger healthcare products company. Again, I'm not providing any recommendations here other than you do your own research. But if you were going to put a small amount of money in a risky penny stock, this might be slightly more prudent than putting it in a money-losing EV company. So what are your thoughts? Anybody out there already owns some shares of SENS? I would love to hear from you. Please leave your comments in the comment section below. I'd be honored if you hit that subscribe button. It doesn't cost you anything, and it just takes a second. And if you like my videos, I would appreciate it if you click the like button. I'll end here for now. Thank you very much for watching, and good luck investing.